The prospect of more direct stimulus checks is causing some controversy and splitting the parties on the issue. Republican Senator Marco Rubio in favor of bigger household payments, although his party largely opposes them, while economists on the left, like Larry Summers, say these payments are a bad idea, even as the president-elect is pushing for them. Here to debate the merits, Bill Rodgers is a professor at Rutgers University and the former chief economist at the Labor Department under President Clinton. And Peter Bookvar is chief investment officer at the Bleakley Advisory Group and a CNBC contributor. Welcome to you both. Bill, let me begin with you. Do you think $2,000 is too much? Do you favor more direct checks in general, or do you think that this was not targeted enough to those who are suffering directly from the pandemic?
Yeah, I think that the $600 is too small. That we need to be something closer to the $2,000, and the reason why, or a set of reasons why, is one, families that are at or below $70,000 in income, who would get this full $600. This would only cover roughly 1 month of food. And maybe a little bit more than a month with regards to housing. And as our public health officials, Dr. Fauci and others have said, we have a rough a few months coming ahead. And so, something closer to 2,000 will help these families to get through the next few months.
Before I turn to Peter, Bill, I just want to read you what Larry Summers has said. Again, this is somebody who usually is pushing for fiscal stimulus, has been pushing for it for years, but is not in favor of the $2,000 amount. He says we already have seen household compensation almost back to pre-COVID levels. Checking balances as of October were higher than they were a year ago. For the lowest quartile of earners, they were 25% higher. We have $1.6 trillion in excess savings, and $2,000 checks would put household income, broadly speaking, next year 15% above normal. I mean, as you know, that's a huge aberration. So his point being, we're on our way back to normal in 2021 without these payments. He thinks they don't make sense from an economic point of view. What would you say about that?
Yeah, well, having had Larry for macroeconomics in graduate school, he's a very, very wise man, and worked with him when I was at the Labor Department and his staff, and have a great deal of respect for Larry. But on this one, I think I do have to disagree. That my economics is that we went into this pandemic recession with income inequality at all-time highs. I help the United Way of Northern New Jersey. We cover a group we call ALICE, where ALICE stands for Asset Limited Income and Constrained and Employed. And these are basically the 38% of households in New Jersey who live at or below what we would call the living wage. And they had tremendous difficulties at the beginning of the pandemic. Many of them couldn't pay that unexpected $400 bill that could come, and so the benefits of providing this additional stimulus, or I call it, really, we're moving back not so much stimulus, we're moving back to relief. That if my view would be different if we weren't facing the next few months of what Dr. Fauci and others have said we're going to be experiencing, which is going to put a drag on economic growth.
Shepard Smith here. Thanks for watching CNBC on YouTube.